Hi everyone, welcome to Fin Decoded. I hope you guys are doing well. So, with this video, we are starting the FM and AFM series on our channel officially, and we will be starting with one of the trickiest topics in AFM, that is hedging. And I will be starting this topic from the most basic level possible, that is the FM level, so that it would be helpful for both the FM and the AFM students. Now then, let's dive into the topic. So basically, what hedging is? Well, if you would ask me to explain it to you in the most simplest and shortest way possible, I would say that it means reducing the financial risks. Well, hedging actually does not eradicate the financial risk itself entirely. Rather, it manages the impact of the risk on an entity. Let's understand it this way. You had plans to go out somewhere and it suddenly started raining. Well, now what you can do is you can either take an umbrella with you, or you can put on a raincoat and go out, or you can either cancel the plan as well. So completely depends on you. Let's assume that you put on a raincoat and went out. So now whether you put on a raincoat or take an umbrella, it's not going to stop the rain itself, but it will definitely protect you from getting soaked. That's exactly how hedging works. Hedging does not protect a entity, I'm sorry, hedging does not eradicate any risk for the entity entirely. Rather, it protects the entity from that specific risk to a certain level. It does not protect it entirely, but rather to a certain level. Okay, so yeah, there will definitely be some impact of this risk, but it will not be at its 100%. Now, what are these financial risks that we talk about? Well, it could be a currency fluctuation, it could be an interest rate fluctuation, or it could be a price fluctuation of any particular commodity that the entity deals with. Alright, we will definitely talk about these in more details in further videos, but let's just know that currency fluctuation, interest rate fluctuation, or fluctuation in the price of a commodity are the types of financial risks against an entity might want to hedge for. For example, if it's a currency fluctuation, then it would be most impactful against some entity which is into import or export business. So they would definitely like to mitigate that risk, that when they are dealing with someone outside their country, they would like to pay as less as possible. Okay, so that's why they would like to hedge that. And similarly, there are other reasons for which a company would like to hedge against different types of risk, and we will definitely discuss that in details in future videos. But how will we hedge against these risks? So we have certain tools, or let's just say techniques, to hedge against risks. And there are basically 5 types of tools that we use. The first one is a forward contract, and secondly, we have the money market hedge. The third one is future, and the fourth one is options, and the fifth one is swaps. Now, other than these 5, there is also one more tool or one more technique which is used for hedging. Well, basically, it's not even a tool or technique, because in this method, the company actually decides not to do anything against the risk. And we will also discuss this in details further, and we will do a comparison among all these the tools and techniques that I just talked about, but not in this video, in some future videos for sure. And that's it. In a nutshell, hedging is basically a shield that the company uses to defend itself against any uncertainty of financial nature, or what we call a financial risk. So yeah, that's all for this video. And in the next video, we will discuss why exactly do a company need to hedge, like what is the driving factor for this decision, and how is hedging going to be helpful, or the pros and cons of hedging, and followed by the different tools that we use for hedging. And so yeah, that's it for now. And if this video helped you understand hedging even a little bit, then do like this video, share it, and subscribe to the channel. See you in the next one. I am Anupam and you are watching Fin Decoded. Bye bye.